Well, good morning, everyone. Sorry for running a little bit late, but we're actually now ready to start. I see quite a few familiar faces in this audience, but just in case, let me introduce myself. My name is Vladimir Zhukov. I'm Director for Investor Relations of Norilsk Nickel. I'm very pleased to welcome all of you here today at our Strategy Day presentation. I'm also very pleased to say that our regular updates here in London has become actually a very good habit of our company. And before we start, let me briefly outline the agenda for today. Our presentation traditionally will be split in two parts. Each part will be followed by a short Q&A session. We aim to finish our first part at around 11 a.m. and after this part we'll have a short coffee break. And we aim to finish the whole presentation by around, say, 12:30 noon, after which we're going to be serving a buffet lunch outside. And now it's my pleasure to pass the microphone to our Chief Executive Officer, Vladimir Potanin. Please welcome.
Good morning, ladies and gentlemen. Welcome to our annual strategic presentation. Traditionally, we started in London. This slide is clear, right? Okay. As you can see on the following slide, our targets remain the same. It's a focus on Tier 1 assets, value, and investment discipline. The delivering on this part of our strategy allowed us to decrease dramatically the capital which was not working efficiently. And in comparison with the year 2012, when we had about 20% of our capital allocated to non-core assets, now we have significantly less. But the problem is that our team dived deeper into the structure of Tier 1 assets, and we faced an obvious fact that some of those Tier 1 assets also have elements or components which we call now as a legacy assets, which mean that they are not necessarily as efficient and Tier 1 assets. And some of those assets have like a common shelter with the within the Tier 1 asset, and we want to sort them in order to understand whether we can efficiently operate without owning those assets. I'll give you just a simple example on our upstream gas activities. We own a significant amount of gas in soil, and we do not need this all this gas. We just need this gas to supply to be supplied to Norilsk, to the city, and to our plants. And which means that we will never unlock the whole value of this gas company, which means that we need some partners who might be interested in developing this. Just in terms of figures, we think that the gas company can produce about 13 or 14 billion cubic meters of gas per year, and Norilsk, to our understanding, will never need more than 3. That's like a gridlock which we would like to unlock, and my colleagues will elaborate on other examples of such legacy assets. Good news in comparison with the year 2013, when we started presenting our strategy plans, is that our sustained business capex is decreasing significantly. And not only we have saved until now about $1 billion in sustained business capex, we have a clear understanding that it will not likely exceed $600 million per year, and which is below expectations, and actually it's below our initial expectations, and I think it's a good piece of news for all of us. I think that the return to our shareholders was quite good this year, and if we compare the time, let's say the value of the let's put it this way: from the last shareholders meeting to the last one, the return to shareholders was 18% if we calculate together the capitalization of the company and dividend paid. I can say you that the main shareholders agreement is working efficiently, and we not only find the ways how to match our interest to the interest of, with the other shareholders and with the employers, but we also even find some possibilities to share our lobbyist capacity, our, let's say, connections, and it works quite efficiently, I must say. Over past 20 years, Norilsk Nickel has created an efficient sales network, and at this stage we can say that we start working on our, let's say, place in the product, let's say, chain, and we're seeking for better opportunities in premium sectors of our material, and to be competitive we do both marketing research and changing our industrial logic, making the quality of our production better, and we intend to follow the demand in premium sectors. During last 2 years, we were more focused on efficiency of our operations, and it remains in the center of our attention, but we also start working on our, let's say, growth story. And I think that the reason why we didn't mention this word growth a lot in our previous presentations was because we understand that there is a certain bottleneck in our, let's say, production chain footprint, and we have a certain legacy coming from old years, and that the downstream operations are, it's a bottleneck for upstream, which means that we cannot efficiently develop our mining and extract more ore, because it's faces a bottleneck in the metallurgical sector and enrichment. But now, by the year 2018, we think that we eliminate this bottleneck, and it opens a growth story which could be based on our resource base, which is just in the same place, under the same infrastructure, and in Talnakh. I would like you to learn a new, maybe, word for some of you. Talnakh. It's a deposit which was discovered in this 1960s, and which was and still remains the largest deposit in the world, with the value of metals of slightly less than $1 trillion soil. And our ability to work efficiently with this field would open for us the growth story after the year 2018. Yes. Oh, this slide is put in the presentation by our advisors. They say that we cannot avoid that. When we say that we are creating a new Norilsk, I know you hear it each year, and actually, if it was a real picture, we would have 3 Norilsk already. But when we say new Norilsk, we mean that we think that we understand what we need to keep a sustainable development in this region for years. And of course, we have been speaking already about capital discipline, value, and other issues. Now I would like to say that maybe one of the most difficult challenges for us is to change the environment and to be more focused on HCE issues, environmental issues, and what we call social responsibility. And previously, when mentioning those terms like social responsibility, we were more thinking about socially acceptable behavior for our company, and let's say we were thinking to be politically correct, loyal to our country, to our state, and to our employers. But now we merge this concept into business logic. We understand that without creating a new environment in Norilsk, we'll never get necessary human resources, modern, I would say, human resources, because people do not want to go in a city where there is no internet, for example. That's why, for example, we decided not to wait until regional authorities or federal government until they solve this problem, and we started to invest relatively small amounts of money, but in a very important project to bring the speed internet to Norilsk. It's very important both from the point of view of management, of course, but it's also very important for creating a new modern environment for employers who live in Norilsk. Same story with the so-called sulfur project, which we are about to launch in next year, and by the end of, say, by the term of this project, together with the project on copper plant, we will achieve 99% efficiency in collecting sulfur, which changes dramatically the environmental situation in Norilsk. This is all about what I have just said. Yeah. Another important point is to balance the corporate interest and shareholder interest with the vis-à-vis the interests of our employers. And if we compare the motivation system which existed, let's say 3 years ago, to what we are launching now in Norilsk, you will see a big difference. The main thing is that the KPIs which we implement in the company are very simple, are very clear, and I would add to that they are flexible. For example, when one of our major targets was to reduce the working capital, one of the corporate indication was working capital. But now we achieved the goal. We have just decreased the working capital by $2 billion, and now it's about $1 billion, which looks like optimal maybe number, which means that it's not anymore in the first line in our agenda, and we change that for free cash flow and EBITDA. And I think it's a good thing to have those corporate indications, to keep them flexible and to change them according to our targets, to be more focused. The result. I think that we are privileged to have a good working relations with the government and with the state-owned institutions. I think that's it will be important when we are talking about developing a new fields, to explore new licenses which we have, and when we say that our main growth story is Talnakh and everything which is around Talnakh, but we still have tier 1 assets in Kola, and we think that when launched Bystrinska Chita project is also tier 1 asset, and everything which we can add to this basket of efficient investment, we would do so. And the main, let's say, bottleneck and that the main obstacle is the lack of infrastructure. And working together with the government and with the regional authorities helps us to solve the issue of infrastructure. As a closing remark, let me say that I personally believe in Norilsk story. As you know, I'm not only CEO of the company, but also one of the main shareholders. And I hope that we'll meet next time in the good mood, like we do today. Thank you very much.
Good morning, ladies and gentlemen. In my presentation, I will take you through 4 main topics from our point of view. It's a health and safety environmental program. It's further work that was done by management on the upstream strategy. It's our work on the operational effectiveness of the company. And we've done some work on update and on production assets assessments. In our health and safety strategy, company, as you see, is still striving on a zero fatality. And secondly, we're trying to actually annually improve our safety performance by decreasing lost time injuries by 20%. It's a stretch target, quite tall, but as you can see in 2014, right, we managed to achieve our target. We reduced number of accidents on the mines and the other operations by 43%. That's probably first step, and the second step will be much tougher. But company is preparing for this journey, and what we're doing for that is, you can see, during 2014 we managed to actually put all our standards in place. Right, we actually launched the training programs for the employees. We're running the risk assessment programs on all our operations. And and it's also the link to the behavioral-based management at our operations as well. DuPont, well-known company, actually have done second assessment on the safety issues, and they actually admitted that in 2014 there was a remarkable improvement in our standards. The next assessment will be in 2016, and we hope to see same good results. Environmental program actually based on an environmental management plan that was actually prepared for all our sites, and key projects that will provide actually significant reduction in sulfur dioxide emissions reduction, actually listed on this slide. And this journey also, they started in 2013, and the significant project that's mentioned as Nadezhda smelter sulfur dioxide capture project is in progress currently. The Norilsk smelter shutdown is in progress. In 2016 we'll start with the closing of that plant. And you can see the graph, in the medium term we will see reduction in the sulfur dioxide emissions by 15%. And in a long-term term, as Mr. Potanin mentioned already, we're going to actually create, the healthy environment in Norilsk and at Kola Peninsula as well. The next slide shows the timeline for the major project. And as CEO mentioned already, the feasibility study is well in progress and will be complete in July 2015, means, that this year. And we're also in the process of tendering process, the picking up, the EPCM contractor. And that process supposed to be complete in 2015, end of 2015, and the construction will start in 2016. And just, this project is going to reduce our sulfur dioxide emissions at Norilsk by 50%. The same happens at Kola, although, the projects are at much smaller size and the magnitude, but yet we actually, with the projects that have been launched in 2014, we'll be able to reduce our sulfur dioxide emissions in 2015 by 20%, and a further program will be focused on the modernization of nickel smelter and the copper smelter at Kola Peninsula. Last year, we reported on our downstream strategy. As you remember, that was actually the concern with our smelting and refining capacities. And also, we promised that we're going to actually look at our, the upstream strategy that's supposed to match our, downstream strategy. This work was actually, it's actually is being done, and a significant portion was done in 2014, and we're doing it currently in 2015. And that was done through the prism of, first of all, criteria for Tier 1 asset, and also, through the prism of, the main aspects such as macroeconomic environment, and also, the recent exploration results, and as well as, the stricter criteria for, the investment process, which is actually, that's well-defined, the projects with, the specific economical effect, etc. So, in doing this, as a result, we actually formed, the three scenarios in our strategy. Those scenarios are as is, then it's the base case, and it's a blue sky, right? So in a base case scenario, it's as is operations, and also, the projects that actually went through the very strict, the procedures, and were determined as, the promising and profitable, and in line with the Tier 1 criteria. And those that actually, they didn't go through this, the process, didn't meet criteria, but we considered them as, the high potential projects. They actually went to our third scenario, blue sky scenario, and the further work will be done on them. And you can see the base case scenario, or we call it, the base portfolio, right? The blue, dark blue, it's a scenario as is. And as if company wouldn't actually put any capital for the new projects, right? And you can see there is actually the decrease in the production rate from current to approximately 11 million tons at Kola Peninsula, at Pola division. And also you see formation of those, the projects that actually went through the strict criteria. And we must admit that the four of our main projects that we reported previously that's actually went through this the criteria. That's Taimersky, Oktyabrysky, and Komsomolsky mine, and they met the criteria with regards to the efficiency, You can see the IRR rate, the still, regardless of, the macroeconomic parameters, still quite, the high. And, those, the 3 projects on budget and been actually, they executed on time so far, right? As you can see, the approximately, capital expenditure on this, the 3 projects, approximately 150 million per annum. And that's actually going to stay until 2024. So that will allow company to maintain our production line and, and replace, those, the assets that will be depleted to that date. If you get to the 4th project I mentioned, normally we actually, update you on this, Skalisty project. And in line with the assessment, project parameters actually, they haven't changed, significantly. You can see it's still, the quite efficient project with quite, the high IRR. We still confirm our capital indication up until 2025. And I must actually, inform you that, in 2014 we managed to commission, the 3rd stage. So the official commission actually been announced in March 2015. That's the surface infrastructure and some underground development, right? The shaft sinking and development for the deeper Skalisty, that's actually, it's a major essence of all this, project, is also on time and on budget. And you can see some, the figures here, and that's in line with our targets for 2014. This, the pictures just, to show you, it's a main production shaft at Skalisty mine, right? And this shaft will go as deep as 2 kilometers. Right, the completion date for that shaft, in fact, 2017, and the next shaft, approximately like this, is going to be commissioned 2019, and that will open, the entire, resource of Skalisty mine for the full exploitation to the full production, which is going to be in 2025. In my presentation, I've mentioned blue sky strategic scenario that normally forms, the growth pipeline of the company. And apart from those, the high potential project that I've mentioned and that we're not actually, they went through the strict criteria in the first, in the first place, right? They actually been actually, they shifted to, the 3rd scenario, blue sky, right, or potential growth, and they will be examined, as I mentioned, in the future. Another 2 sources of potential growth for the company, as Mr. Patanin mentioned in his presentation. The first one is the extensive resource base, and I'm going to talk about this a little bit later. And that's going to form so-called brownfield projects or resource extension projects. The second source is obviously, the green fields. Here we would like to mention, Maslovsky deposit, and those, the 6 licenses that we obtained in 2014, right? And they're in the vicinity, in the radius of 150 kilometers from the current operations. And in fact, potential of those operations up to 500 million tons of ore in the ground with quite, the remarkable grades. And as, the first stage of exploration is complete, we're going to inform you on those, the outcomes. This is the potential for brownfields. It's a quite, remarkable figure, 2.1 billion tons of ore in the ground resources, right? And you can see in the active exploitation, just, the 300 million. That's a current project. You can see, the further segmentation on a high-grade ore. High-grade means, it's a really high grade. It's a value in the ground close to $1,000 per ton. Right, and it's a cuprous ore where, the copper content is slightly higher than, the nickel content, with, the approximately the same content of, the platinum group metals. And it's a low-grade material where, platinum group materials actually, the grade stays slightly below the high grade, but still, the quite, the impressive ore. Right, the value in the ground in the low grade, so-called low grade, is up to $130 per ton. And that's in line with, the currently known deposits in the world. Right? So our target is, in fact, to go through the further segmentation. You can see what we call low-grade, absolute unexploited, right, we still have, the good potential on a high grade and a cuprous, the ore. And that's a target for the, the management for 2015-16 to actually, to identify, high potential projects and put them in a pipeline for the blue sky first and secondly for the base case scenario. This, as I mentioned, potential of Maslowski deposit. There's several previous presentations we actually were informing you on the progress on this license, and we ultimately received this license from the government, right? The company quite advanced on the work on this license. We're in the process of doing the advanced exploration and the early pre-fees, right? That will be complete in 2015. Then we're going to spend 2016 for finalization of pre-fees and the feasibility study with some the advanced geotech and hydrology, etc. Right? And the investment decision will be actually made in 2017. Right? Also, companies focusing on the fast tracking this project with regards to implementation, not on the studies, but on the implementation. You can see the major features of that the potential mine. It's might become the one of the largest PGM mines in the world, right? With the very actually the higher grades in the platinum group metals, but also you can see it's quite have a good potential on copper and nickel, right? That's why we're looking forward with further developments with this license. This slide is last year we actually reported on the launch of our downstream strategy, right? That's just to remind you, it deals with our smelting capacities, refining capacities, and the concentrating capacities. And as you remember, we actually decided to close or shut our obsolete facilities at Pola division, which is nickel smelter, and the focus on the increasing potential for Nadezhda smelter also at Pola division. Right, that will go up to 2.4 million tons smelting capacity with improved modern technology. And as we speak now, Autotech is actually finishing the designs, and they already start the manufacturing the future furnace for that smelter. Right, the commission time is November, December this year. Right, and that will actually open new era in our smelting capacities for Norilsk nickel at Pola division. This strategy also deals with the reconfiguration of our refining capacities. All refining capacities on nickel is going to move to Monchegorsk at Sokola Peninsula, right, with some modernization using new technology and increasing capacities, plus fully utilizing our the Finland operation Harjavalta, right? The company will be able to meet our production guidance that we actually reported before. So we have to actually inform you that that this project has been launched. I mean reconfiguration, and it's currently on budget and on target time terms. The second stream for our management is really to focus on the efficiency of our operations, current assets, current operations, and here we deal with the issues like the recoveries, overall recoveries from ore to final product. We also deal with our the work in progress, the stocks. Also, we actually deal with the process and the secondary deposits that have been accumulated over the years at the tailings dams and the copper slags. So lots of the trade-offs been done in 2014, and I hope in 2015 will come with some finalization of those on the projects that will actually add to our efficiency in the future. Right. Also, some small projects that you can see, the value we actually hope to achieve in the period 2015-2017. That actually deals with one of the facilities that we're going to commission this year, and that's the cobalt cathode production at Kola Peninsula, and that's going to improve, the selling price for our, the cobalt. Right. We also deal with, with getting, the higher assessment of our, the copper cathodes at, the LME, right? Going through the international tests. And it's also, the small programs at each and every operation with regards to the optimization operational costs. So all in all, we actually, hope to achieve, by 2017, end of 2017, the overall, the effect up to $1 billion. It's a quite tall call for the management, but, we actually working on this, creating the programs and improving efficiency. Right, this is a program that actually concerns, the concentrate, also in line with, the reconfiguration program, right? The first stage, you probably know that, the CEO actually, they opened the first stage of Talnakh concentrator in January 2015, right? It's currently open, working, and it's delivering what we actually, promised with some improved efficiency and recoveries, right? The second stage, that's increasing capacity up to 10.2 million. In fact, it's an entire revamping of the concentrator. It's just, the cold increase in capacity from 7.2, but in fact, it's absolutely new concentrator in line with a new technology, which is going to actually process 10.2 million tons of ore. And that's is going to produce, the high-grade concentrate, much higher than what we produce now, right, with, also improvement in the recoveries, right? The next stage, in fact, the stage 2, well in the progress on the construction, and the management working on a completion of this, the second stage in the first quarter 2016, right? So up from, say, second quarter 2016, we'll see, the first good results on those, concentrates and the recoveries. And that's actually forms, the part of our efficiency program. Going further on the concentrating capacities, right, because, the Talnakh is becoming, the larger, we still have, the second concentrator. So we'll have to decide how to actually effectively use that, the concentrator. And there you've got, the several options. The options of, the further utilizing secondary deposits, right? We don't think about, shutting this, the concentrator, as it was actually, by someone mentioned, in the press, right? We just, the thinking of, the efficient, utilization of that, asset. Right, and that's in fact, the picture from your stage 1. You can see very nice concentrate, the nice in color, right? And that's what I've been talking about. This is really, the concentrators. I don't know how it's working. You can see, the you can see two concentrators. It's a Talnakh, that's the future of Norilsk. Right, and this is actually, Norilsk concentrator. And, currently approximately 6.5 million tons of ore coming from Talnakh mines to be treated at Norilsk concentrator. Norilsk concentrator is quite old. It's gone through some, the modernization in the past, right, day-in-day replacement of flotation cells and some, the grinding circuit, but still it's actually quite old, right? And it's built in 1942, in fact, right? So 6.5 million annually go to Norilsk concentrator. We've done trade-off, and trade-off actually shown that, it's a more economically viable to build, the third stage of Talnakh concentrator for higher capacity, which is going to encompass all our, the production aspirations from that, the area. And, that will actually free capacity, 6.5 million tons capacity at Norilsk concentrator. Right, and the nearby there is actually a mine, and that mine actually called Zapolyarny mine. Zapolyarny mine is producing, the very low tonnages. Currently it's 2.7, consists of open pit and underground, and the nearest future is actually, the shutting down open pits and going just, 1.2 million tons underground, and that's actually not quite viable option for Norilsk concentrator. That's why management exploring currently opportunity to treat some secondary deposits of, the tailings dams and probably some other opportunities, but that's actually work in progress and it's too early to talk about this, right? But you can see 93% of all our resources or reserve base is going to be treated here at the large modern concentrator, and just 7% of our resources actually left for Norilsk concentrator. The pluses actually upside of this, the move, you can see 6.5 million is going to be actually treated in modern facilities with improved recoveries, and those recoveries quite remarkable. You can see on nickel and copper and the PGMs. That's actually without adding additional, the ore for milling and grinding, although it's also possible options, taking our, the resource base, right? You can see that, you know, the additional metal is going to come from this actually, you know, the efficiency program as well, right? And, you know, the small but also pleasant, that's a reduction in operating cost by $3 per ton, transportation costs. And that's still in a pipeline, and that's what's been working currently. It's just, you know, to put, you know, the mark on in your notes and see what we're going to do in the future, right? You can see, you know, the average age of, you know, the smelters in the world, right? Most modern smelters being put in China, right? You know, Nadezhda smelter that we're going to upgrade and make our, you know, the major, you know, the nickel smelter for Polar division and Norilsk nickel. That's actually got, you know, the approximately the same year age as, you know, the average, you know, the Chinese smelter, right? But, you know, our main smelters, major smelters like, you know, Norilsk nickel smelter and copper smelter are actually, you know, they're quite, you know, overaged, above, you know, the average, you know, the in industry. Nickel smelter is going to be shut in 2016, right? And we're currently working on the programs how to actually, you know, modernize and what needs to be done to copper smelter as well. But that's actually not for the further presentations. Picture shows, you know, 1942, first nickel at nickel plant, and that's how it looks currently. We hope that's going to look better after being shut down. This is slide just, you know, summarizes, you know, what I've been actually, you know, telling you about, you know, smelting, refining, right? You know, it's Talnakh stage 2, well in the progress. Nickel plant shut down, scheduled for 2016. Nadezhda smelter commissioned 2015, right? Well on track. And a Kola refinery, we're going to actually fully revamp our refineries by end of 2017 for the new technology, right? And that's actually, you know, the balance of our capacities on nickel side and the copper side. You see, you know, here Polar in Kola, and you see, you know, the refining capacities. So everything is well and balanced, right? But, you know, the question sometimes coming, okay, you're well and balanced, what's going to happen if you actually, you know, find, you know, more ore and you're going to treat more, right? And there, you know, our first statement from the first presentation of strategy day. So each product is going to be actually, you know, the judge on its merits, right? Where it's actually possible to sell, you know, the first sellable concentrate, company is going to work on this. That's why it's not actually, you know, but currently it's balanced and it's efficient. To summarize, you know, smelting refining, as I mentioned, you know, the nickel plant is on schedule, right? You know, Nadezhda smelter is on schedule. Main dates you can see here, and the expansion and modernization of Kola refinery is also here. And obviously, every strategy, right, won't be efficient without, you know, focus on employees. And so in our, you know, long-term strategy, we actually, you know, decided for ourselves that we're going to strive to improve our production efficiency, our labor efficiency by 10%. Different, you know, the ways to do this, right? But, you know, we actually, you know, they're well in the progress to compiling these, you know, programs. But that's, again, it's a quite tall call, 10% on our current efficiencies. With regards to the employment strategy, right, we actually, you know, we're talking about, you know, the best practices in the, at least, you know, the Russian mining industry. But, you know, we're probably not quite far on of, you know, the industry practices with the best packages for our, you know, remote areas, employment packages. And also started practicing, you know, the fly in, fly out, you know, for our remote operations, because we realize it's more and more difficult becoming, you know, to bring highly educated and experienced, you know, the people to remote areas. That's why we think that's actually, you know, the good, you know, the place, you know, for our, you know, consideration. And what we have to actually, you know, admit, you know, in our construction, our internal construction company in 2014 managed to employ 500 employees from, you know, from the mainland. Right, and they currently work on fly in, fly out, and it's cheaper than actually, you know, the work with current employees, you know, in the Polar division. So that's why it's one of the evidence that the program it's actually, you know, this interesting. The educational program, especially, you know, for employees that actually, you know, coming out of the nickel smelter, right? 2,000 people going through the special training programs to find their place in other operations of the company, right? And apart from this, more than 50,000 employees went through the, the skills improvement programs and, the HEC programs, to actually, to also, move efficiency of the company further. On motivational systems, Mr. Petanin mentioned already, it's a big work has been done on, first of all, designing, the KPIs, key performance indicators for the short-term schemes for our employees. And secondly, in 2015, the program will be launched on the long-term, on TIPS. And that's actually, in fact, they takes into account all our strategic targets. And the top employee is going to be rewarded for achieving those, targets by implementing this, program. Again, Mr. Petanin mentioned about, the deep and examine our operations, existing operations. And, again, I mentioned about that, trade-off that we've done with, Talnakh concentrator and Norilsk concentrator. And doing this examine, we actually saw that Talnakh cluster is actually that, the steam engine that actually moves the entire polar division, right? And, providing with the high margins, right? And so second, our, the unit that's actually going to be formed on the base of, Norilsk concentrator, it's actually not as good as Talnakh concentrator, right? The grade is actually much lower. Resource base also, is much smaller. And we actually applied our tier 1 criteria, and we look at that, the asset saying, okay, right, if we actually just, switch it off, what's going to happen to Talnakh, the cluster? And immediately we see, the improvement in the margin for the company, right? So although it's providing additional, the nickel, but it's also, the reduces our profit margin. So that's why, the task for the management, in fact, and you also, remarkable, that, the cluster, we call it cluster, it's actually, the stays afloat just because of the PGMs, right? The copper and nickel grade is quite low in that ores, right? And it's the PGMs that's actually, that keeps it afloat. That's why the task for the management for 2015, in fact, to find out what needs to be done to this cluster. Either to find, the good, the story and make it, the more profitable in line with the tier 1, or, to find another solution. That's an opportunity cluster. It's an opportunity issue for us. And we also mentioned, the COLA. At the previous strategy mission, we exactly the same what's happened now with, the Norilsk concentrator and that, cluster. You remember we actually put, the question mark at COLA saying, what needs to be done? We can sell it. We can improve it. Let's see what's actually the best opportunity for the company, right? Due to the efficiency programs in 2013-14, right, we can report that, the COLA by its actually, the margin is actually very close to 40% EBITDA margin, right? There are a couple of, the promising resources nearby, and, it's opportunity for us. The ruble-dollar exchange also quite, helped in this, the story. That's why we're saying, yeah, it's tier 1 now. We don't know what's going to happen tomorrow. We're quite, confident in our, the efficiency programs and the further improvement on the COLA. But it's going to stay as an opportunity target for us, right? They can keep it as a tier 1. It's a tier 1. The moment it actually drops, below, the company is going to consider what to do with this asset. The Bystrinsky project, right? We mentioned about this project several times as well. You're well aware that, it's a promising, very low-cost operation, right? With under new macroeconomic, the conditions have been tested again, and you can see that, it's still, quite, profitable, right? And it's actually, the oil is being constructed and it's on target. We hope to commission this in 2017, although several issues are still, in existence. And that's where we actually work with, the government, on some infrastructural projects. And a colleague of mine, the Mr. Fedorov, is going to touch on this, in more details. That's actually just, the current statement and the status on the Bystrinsky project. You can see all tick marks, all good stuff. But our major concerns, but not the problems, but just the issues that we actually work now on. That's actually infrastructure, railway, and that's actually the electric power supply. Bystrinsky project, it's in a new area for Norilsk nickel, and you can see it's actually it's a stepping stone for the further development. In fact, due to the geological information, it's quite promising area with the high potential in copper. Remember the first strategy mission we actually announced that our strengths in the profile in the metals that actually we know what to do with, and that's actually nickel, copper, and the PGMs, right? And that's actually copper region. You can see the figures. It's quite the promising copper region. So if Bystrinsky goes well, right, we recently took the several licenses here in this area, and it's got the potential of approximately 6 million tons of copper in the ground, and also the quite good with regards to the gold in the ground. So now with the first stage of exploration, we'll have to understand whether this is a true value, and we'll report on this at the next strategy meeting. This is just to confirm our production guidance. Right, you can see what we shown you in 2014, and that's a 15. And in 14, we actually met our targets, and that's actually the production guidance up to 2018. And in a conclusion, that's the major conclusions from our presentation. It's really we're striving to be actually in line with the first class. World-class operations with regards to the HEC, right? We're actually working on a redefining mining project portfolios. At this stage, we can say that we're actually quite comfortable up until 2020, and at least 5 years beyond that the date with our the operations. The management is still quite focused on the return on capital invested, and we are focusing on the upstream opportunities at Polar division. And our next step is really, to further segment our operations and see what we can do with a further improvement in the value. And actually, we can say that, our key strategic projects are still on track. And with this, I would like to actually give the word to a colleague of mine, Mr. Fedorov. Thank you.
Thank you so much, Sergei Nikolaevich. Good afternoon, ladies and gentlemen. It's my pleasure to present to you Norilsk's continued progress toward the execution of its strategy and our evolving thinking on what we believe is an additional take on unlocking the value of the business. As our CEO, Mr. Potanin, noted, our quest for efficiency in business continuing, and indeed today we will be discussing yet another layer of unlocking the efficiencies and delivering the value to our shareholders. Let me focus on 4 areas which I think are important for us to understand where we're coming from. First, we will discuss in my brief section our progress in building the best-in-class investment governance system, because we believe that at the end of the day, this is the key source of value creation for our shareholders. This is what truly differentiates Norilsk from a number of its competitors, and we believe that we are progressing well towards building one of the best and most efficient governance systems for investments, not only among the Russian companies, but in the global mining industry. Secondly, what will be important is discussing our quest for corporate efficiencies. As you remember, a year ago we came to you and we said, in the course of 4 years, we'll try to deliver you yet another year of cash flow, and we did it last year. Today, essentially 2 years have passed, and we have delivered on 80% of this target that we set for ourselves. That's important. Thirdly, and you've heard today an important new definition of what we call legacy assets. Again, we're peeling off the onion of searching for new efficiencies and sources of value that have been previously locked up in Norilsk system. 2014, in all honesty, was a rather difficult year for us as we went through a comprehensive strategic review of all the assets in our portfolio. And as of now, we have a hypothesis on 3 assets that we believe contain material value for our shareholders, and this will be exploring a range of options on what to do with those things. And I will comment on what needs to be done and how we plan to report back to our board by the year-end 2015 on strategic alternatives for those businesses, namely the Polar Division's South Cluster, which is the tail assets of the Polar Division, the gas upstream businesses and logistics assets. And finally, today we will reconfirm the shareholder return targets for a company. As our shareholders are, as the management is, put it colloquially, sort of, show me the money type of people. We want to make sure that, the opportunities we pursue and the results we show, they have a very clear bottom line for our shareholders, and as such, the company is maintaining its best-in-industry dividend targets for the long term. Now, let me dive into some of the key slides and comment in a bit more detail on what we're actually seeing in each of those four directions. First, in terms of investment governance, as I mentioned, this is a key source of value creation. We actually see, shall we say, up to $8 billion of shareholder value that could be created through a quality management of our investment program. Mr. Dichenko mentioned that, with essentially 2.5 years past, with the new management team being in place, all of our strategic reconfiguration projects are on time and on budget. And what's important, all of those projects, especially if we talk about our commercial investment program, they do have very high profitability for shareholders, even in the current market conditions, which we believe are not all that sustainable, and there is a reason to believe why the nickel market might play a very different note in the coming months. But even in the current depressed market conditions, those projects are very, very profitable. Stay-in-business capex for us is an important measure of how efficient the business actually is. And from our side, we've made tremendous strides working with your expectations of what our stay-in-business capex should be. And comparing that to the analyst street expectations for year 2013 and 14, you've seen that we invested, we saved, $1 billion to our shareholders by being much stricter and much more differentiated with our stay-in-business requirements. Through implementation of EBITDA risk and other measures. Going forward, we do believe that our long-term sustained mandatory capex, as Mr. Patan mentioned, will be around $0.6 billion per year. Yes, we will have in 2016-18, few one-off investments which relate to sulfur capturing units, which do relate to some of the IT investments, but those will be targeted and one-off. But on the long-term basis, we will be rather comparable, and here we show why, with our key peers in the mining industry, looking at this as capex as a percentage of revenues. FX was a helping factor, especially over last year when FX spent was really in our capex program only about 10%. So we had the benefit of ruble depreciation. This is why you saw our capex for 2014 was around $1.3 billion. Going forward, because of the large portion of foreign equipment and supplies, this will be coming primarily in the sulfur capturing projects and a number of other EPCM stations, we will see around 35 to 40% of our capex being FX denominated. So I think that gives you a very important measure of how our capex will evolve in terms of FX exposure. Now, talking about absolute numbers, what we would like to do is to reconfirm to you our long-term guidance. With all the savings we realized over the last few years, we talk about an average $2 billion per annum capex going forward, and that will be a number that will be probably somewhat higher in 2016-17, as we see the realization of some of the one-off mandatory capex projects. But all in the average will maintain the same, and $1 billion is a residual capex for completion of Bystrinsky project, which will be funded primarily through project financing, about which we'll talk again. Now, all of this, to give you a sense, is being fully supported by a very deep reorganization of company systems, both acquiring new talent, putting new IT systems in place, putting new processes and balances and checks. So this is a rather comprehensive rewiring of the internal workings of the company, with the investment committee really putting its branches down throughout the organization. Now even the smallest projects being considered very carefully, looking at the net returns and necessity for the business. And this is what's allowing us to yield the results I'm talking about. 5 and 4 program that we discussed, giving you 5 years of cash flows in a period of 4 years, 80% delivered on. Let me go through some of the highlights, but as we discussed before, the main driver, and Mr. Patan mentioned this, was a remarkable decline of the working capital, which was one of our main KPIs over the last 2 years, and we'll be seeing what we can do further and beyond that. But obviously, it's important to balance this objective with making sure that the business is very well operated and maintains a balanced production profile. This is a key slide, which I think is rather important to focus on, and let me just spend literally 2 minutes explaining how we think about the business, and this is a result of our strategic review that our CEO referred to. First, there are businesses that have always been and will always be an important part of Norilsk perimeter, and this is primarily our Talnakh business. This is the polar division Talnakh. This is the $1 trillion of metals in the ground. This is the core of our growth story. This is what will be our future going forward, and it's tier 1 operating asset that really is driving the most of the results of the company. There is Kola that by now we have proven is a tier 1 asset, and again that sits in this box. Now we have potentials. Potentials are obviously Bystrinsky, which will become our tier 1 asset upon launch, and then we have a value hypothesis of tier 1 for Maslovska, which, when operational, will be the world's largest standalone PGM field. But that again is yet to be proven, and we will have a target of 2017 when we are supposed to make an investment decision on Maslovska. By now it's basically completion of exploration work that's being done. Now, what we've done over the last year, and that's the most important part, is we've taken all of the supporting businesses and businesses that are not really tier 1, taking that one layer down and looking at the lumber numbers, looking at relative efficiencies, looking at market opportunity. And we see portfolio of businesses. Obviously, there are some, such as our residual non-core assets, for which the judgment is rather black and white. So it's very simple, and we already made the decision. There is a good progress in disposals. I'll comment on this in a second. But then we identified that there are other businesses in the perimeter of a company where some of them are really not separable from Norilsk, and they have no really outside market opportunity. For example, gas pipeline business. We want to control where the pipeline network is developing, because we want to make sure that this is serving very well our production facilities and our evolving upstream and downstream operations. There is power, which is again central. There are service companies. So there is very little third market opportunity for those things, and as such, we don't really see after a strategic review a value hypothesis for those things. However, for 3 assets, and this is one of the very important takeaways from today's discussion, we see the value opportunity. Those assets are undercapitalized in our perimeter currently. Norilsk kind of owns them, operates them, but still we believe that doesn't unlock all the value. Now, let me just show you the examples of these businesses. Now, on non-core, as I mentioned before, the disposal is largely on track. We have closed the sale of most of our Australian businesses. The Nkomati Tati African business sale is on track as a package transaction. As a first step, we closed Tati in April. For Nkomati closing, we're waiting for the next few months for regulatory approvals. Out of 14 condition precedents, 12 have been satisfied. So when that's done, we'll see a total $1 billion economic impact unlocked for Norilsk shareholders, and essentially around $0.6 billion of real cash. Now, going forward, in terms of the legacy assets that we see for ourselves, we see a value hypothesis, and we discussed this sort of in quite some detail with the management board. We present this to the board of directors, and we have a support for moving with stage 2 strategic review for 3 assets. First one is what we call the South Cluster Tailco. Second is the gas upstream business, and the third one is a select logistical assets, and I will discuss what those are. Now, in terms of the South Cluster Tailco, as Mr. Dichenko mentioned, with continued reconfiguration of our downstream business in Polar Division, we see the business that's really the heart and the future of Norilsk. That's Talnakh. Now, for South Division, that is becoming self-sufficient as we progress with our configuration, and that accounts only for about 4% of our production currently. What we see is largely open pit operations, which are ceasing to exist as these fields are depleted. Well, we're seeing very outdated Norilsk concentrator factory. All of this story is dated back to 1940s. This is a 1960s discovery, and really this is $1 trillion in the ground. Now, if you look at the numbers, South Cluster is not only fairly depleted, you actually see the production profile being very negative, scale not being there. But there is an upside. Arguably, there is an upside of a largely PGM story around these assets. There is a hypothesis in turnaround, but still, the question is what is the best way to tackle this opportunity? Because clearly for us, this is not strategy compliant. This is not a tier 1 asset. So, I'll discuss later on what options we'll pursue, but I think there is an argument that the value of this business is not fully reflected of capitalization of Norilsk Major. Let's discuss what can be done. A very similar story is being played out for our gas business. This is where it sits. And we take gas, a few hundred kilometers to the east, to the city of Norilsk. This is where our main production facilities are. We talk about 3 billion cubic meters per year. Now, this thing and the area around, it does contain some reserves. I mean, it's not a major producer, but obviously it's larger than a number of other captive companies. Now, you talk about the resource base, it's almost, 300 billion cubic meters. Now, the big issue is that, there is nowhere to take this resource base to. We only require 3 billion cubic meters. It can produce 13 to 16. And the question, who is there to take this asset to a different level? Obviously, what's most important for Norilsk is having the right guarantees on uninterrupted supply of gas. Yet the fields are there. They have fairly low costs. The only issue is, call it $1.5 billion that's required for really, making initial upfront investments in field development, full capacity, and building the pipeline. We are not the right investor for this, so let's explore who in the market will have an appetite for this and would be able to deliver on this, value opportunity. For logistics business, and let me, before I dive into this slide, introduce, an important senior member of Norilsk's management team, Mr. Sergei Batekhin, who is running our logistical and marketing business, and you have the first-hand opportunity to ask him, of some of the initiatives that are being carried out in logistics and marketing business. Because in logistics and marketing we adopted new strategies just actually this year, following all the work that's been done over last year. And for logistics, we now actually clearly see the business that really is the heart of Norilsk. That's really the internal workings of Norilsk, our seaport operations, our fleet, our Dudinka, Murmansk terminals. We see what we call the river cluster, that's Yenisei River assets, and here we have some interdependencies, but really, we could see that not really necessarily being part of Norilsk proper for long term. And then we actually see some of the assets where we own them. But again, it's only 20% of turnover of, say, Arkhangelsk port. That's interesting port operation for the broader offshore development in Russia. We're clearly not the anchor customer. We're just one of the customers, and there is opportunity to develop this operation, to a full extent. So on this one, actually, we've made already decisions, so the hypothesis has been confirmed, and we'll be moving forward with a sale of this business in the second half of this year. So these are just some of the stats for this opportunity, if any of you actually would like to be potential investors. Stage 2 of our strategic review for these assets will basically involve conducting internal restructuring of these assets. So each of those sits under a clear umbrella within the organization with a crystallized P&L. In the next few months, few quarters, we'll be looking at options for each of those 3 assets. Those options could include a deep internal restructuring and turnaround if we believe this is something that sort of that needs to sit within the organization to deliver to its maximum value. It could include an option like it's been carried by Norilsk for Polish company a few years ago, a demerger. It could include an outright sale, or it could include attracting an equity partner in capital that would be the right partner to deliver the opportunity. So all of those options will be examined, and we'll be looking at relative merits, and we'll present back to the board by the end of this year to see what delivers the best value to Norilsk shareholders and unlocks the value opportunity for these assets, and we will be reporting back to you in the first quarter next year. For Bystrinsky, Mr. Dyachenko mentioned the work that's being done. Obviously, this is a tier one opportunity for us, but that's a greenfield opportunity, right? And with all the progress we're doing on our side, there are still outstanding project challenges, and this is where I think we need to make sure we are seeing eye to eye on some of the challenges, and hopefully, with all the help we're trying to source in the markets, that project will be launched on time and on budget from our side. But there are external parties, and working with those external parties sometimes is not easy. So, to overcome those challenges, what we propose, what we put forward, is a de-risking proposal for Bystrinsky. So, in the coming weeks, you'll see some of the proposals being discussed at the board of Norilsk, looking at essentially de-risking the profile of this project. First, we have an interim project financing offer from VTB Bank of up to $1 billion. And what it does on a non-recourse basis, it makes the project fully funded. So this is an interesting opportunity. We want to look at this. Obviously, we'll look at strategic project financing options with the likes of VEB, with whom we continue dialogue. We've been working with them for the last year and a half on assessing the project, and we need to get to a point of decision in the coming quarters. Secondly, we are looking at having the right minority equity partners. Norilsk, sees this project as an interesting opportunity, which is really fitting well into the Asian economic ecosystem, but still that would benefit from having the right opportunity, the right partners that would really make that window open vis-a-vis the Asian market. So, we're looking at selling minority stake in this project to best-in-class investor with ties to the Asian market. We're also looking at an offer made by VTB to acquire an option for up to 25% stake in this business. Those options are being examined. We do believe having strong partners in this business would help shareholder value and would help us to de-risk this opportunity in many ways. Now, commenting on some of the further developments in the palladium market, you obviously seen the headlines about the palladium fund, so want to make take a special note of this development. Norilsk is a leading player in the palladium market, 44% market share. Now, looking at the existing stockpile, as you know, that's been a major source of volatility for palladium price over the last decade, and we actually, from our side, would like to be proactive in making sure that this stockpile is managed well. It's not becoming a random factor to the palladium market development. So we've been in active dialogue with Russia's central bank, which has some of the palladium stockpile. That dialogue is continuing. From our side, we made a number of corporate decisions on committing, should there be a transaction, up to $200 million of capital to this opportunity. We do have interest from number of other LPs to be partners in this opportunity. And the idea basically is creation of an absorption mechanism for central bank stockpiles, making sure that it's not being randomly sold to the market, but we have an industrial sales network that sits next to it. We have very strong partners to take this forward, making sure that this is a workable setup. We shall see how this dialogue progresses. By now, we are in final stages of negotiating the framework agreement with the central bank, and let's see, how that progresses in the coming quarters. But this is just to make sure that we are all on the same page in terms of what this palladium fund opportunity is, and how we think about this jointly with our shareholders. Talking about shareholder returns, we've seen the company paid, 4 years of 2013, 14, $7 billion of dividends, overall. So that was the objective that's been initially set out in the shareholders agreement. That objective has been fulfilled. Going forward, we have a very simple message to the market. The company will be paying 50% of EBITDA as its dividend target, and this is the industry leading number, as evident by some of the statistics that you can see. for 2014, it's even more evident given numbers you're going to receive. But going forward, that still will be one of the best shareholder remuneration policies in the industry. I think from our side, we also want to comment on other ways that we're looking at making sure that our shareholders are receiving the right returns. Over the last 2 quarters, we saw at the very least 2 examples when market was so volatile with everything that was happening broadly in the market, that acquiring our own shares made more sense than investing in highly profitable brownfield projects. So from our side, what we're convinced of is a very serious undervaluation of Norilsk fundamentally by the investor community. And as such, what we thought was important in March of this year to send the investment community a signal that the company is majorly undervalued. And the management obviously can't send the signal through paying dividends, but can send the signal by saying that, listen, we will be there with up to $500 million share buyback. Deutsche Bank is our partner in this opportunity. They're acting as our agent. And in case of market volatility or unexpected market weakness, we will be stepping in, making sure that the market is there and shareholders do see a far more stable share price than they could be seeing. Obviously, we haven't bought any shares up to now because the market was growing and the performance was rather good. Our anchor shareholders are not going to participate in this share buyback as they informed us, and we'll be providing you a regular update on how this is progressing. But all in all, we believe that was an important signal to send to the market. From my side, that largely concludes this part of the presentation. Let me now turn to Mr. Vladimir Zhukov for moderating a quick Q&A.
Yes, please. Turn the table. So we're now ready to take questions, please. Anyone?
Thank you, Vladimir. My question is for Sergey. I don't know if it's possible to go back to slide 31. If not, no, that's okay. Look, I wanted to ask, I thought it was quite interesting that you were able to identify this high-grade core base portfolio. What I was trying to reconcile is it looks like you've identified that resource base was much higher grade, and so I was trying to reconcile it with the production rates, because if you plan on maintaining your production volumes at 17 million tons, but if you're going to have higher grades, then would your production not be higher than, let's say, like 225, 250,000 tons of nickel that you're guiding for? Just wondering if there is an opportunity there to increase production or decrease costs, or hopefully do both.
To answer your question, you're absolutely right. You actually saw that we reduced our production profile, right? And through the efficiency program, we'll be able to maintain the production rate in terms of the metals at the same level. There might be some fluctuations in a positive way, but at this stage we would like to just report what we promised, right? That's the first one. And as you're rightly saying, because you're going to treat the less ore, there will be actually opportunities on operational side, on operational cost. That's what I mentioned in the slide, saying that's the actually efficiency improvement program, and that's the operating cost improvement.
Next question, please.
Hi, can you give us some guidance as to what nickel prices and PGM prices you're using to get your 20% IRRs on your investments, and the ruble as well? What rates are you using?
We're using our internal company forecasts. We do not disclose them, but what we also do, we do stress test all of our projects in the current spot prices with inflation being put on them, and all of our projects in our core investment portfolio, they do satisfy the 20% threshold. So in essence, you could say that those are spot price with inflation prices to get to above 20% IRR threshold.
Next question, please.
No questions.
Okay. Sorry, 2 more.
Yeah, good morning. Thanks a lot. Nikolai Sosnovsky from UBS. I've got one question on about slide 59, when you break down your efficiency gains in terms of free cash flows. Are you still on track to this $4 billion ultimate target? And if yes, what's the remaining $800 million amount? So whether it's working capital, sale of other assets, so what's in it?
Yeah, basically, it's a very simple answer. I mean, it's a combination of closing on the sale of Enkamati and working capital improvements. With some SG&A savings that we'll also see in the coming years. So I mean, that's a combination of those things. We do believe we are largely on target. If not to say more.
Next question, please.
Could you please comment on Interao shares sale? More details?
It's for sale.
Maybe something on the timeline?
Yeah, we're not in a hurry to sell. Obviously, we do believe the management of Interao is doing a great job. We've seen the share prices have been going up steady, so we do comment them on that. And obviously, our shares are for sale. So if you have interest, anybody, we'll be looking to do that.
Next question, please.
Yes, thank you. Neri Talardo from Morgan Stanley. It's linked a little bit to the first question, but thinking a little bit more longer term, since it looks like your grade profile will improve, if not stay stable, for the next foreseeable future. But you are mining above your reserve grade. So the question is, how does this new sort of strategy fit into the fact that eventually you will have to mine the lower quality ore?
We're not mining the above, the grade. And as you actually saw on the slide, that's a combination of 3 ores, right? And there is a balance between them. That's a high grade, it's actually the cuprous, and it's a low grade material, right? Obviously, with the further improvement in our the concentrating capacities and efficiencies, right? That will allow us to extract more out of the approximately the same spread. So that's why we're not going to high grade, right? We're going to actually mine as we actually the plant, but the better the capacities and efficiencies will allow us to maintain the same profile.
Thank you.
Thank you, Sergey Donskoy, SocGen. One question from me. You estimate your stay-in-business capex at $600 million. Could you remind us how you define it? This capex is sufficient to maintain stable ore production, or maintain a stable metal output, or what exactly does it mean? Thank you.
It's actually that's a stable. That's the metal output, right? And we mentioned about the some of the projects that they had to be probably fitted in the past as a part of the large projects. For example, sulfur dioxide capturing facilities that had to become the part of one of the smelters, and it wasn't. So that's why we'll have to actually close this gap, and you'll see the some spikes and on our stay-in-business capital. Once done, it will be the quite the steady state at what my colleagues actually mentioned.
Well, let's take one final question before we go to a coffee break.
Vlad Sergeyevsky, Barclays. Gentlemen, it's actually first time in a while we're starting to hear from you something about growth options rather than just efficiency. And I'm just wondering, what are the major drivers behind this, not transition, but evolution in this front? Is it the fact that you have achieved largely your efficiency targets you set for yourself before? Or is it just about thinking about commodity cycle broadly and seeing no one investing in this stage and thinking maybe it is the right time?
Well, thank you so much for the question. I think it really is a combination of things. There is a meaningful progress towards making this a far more efficient company with all the investment government's place to really pursue growth opportunities. Now we actually feel that there is the ground under our feet on which we can grow and develop.
I think secondly is realization, as the upstream audit was completed, of the tremendous growth opportunity we have in front of us. You know, with the current production, we are negative cash cost position player in the industry. The industrial story for our metals, for nickel, for palladium, is very strong. The markets are growing, and we're the leading player. And then we have what other players in the industry do not have, which is a unique resource base, and that resource base is primarily Talnakh with this $1 trillion. And to be honest, you know, over the next many decades, really, you know, if you sort of think about even the Soviet planning system, it was always back solving, always finding little pieces to, you know, snatch here and there at Talnakh to feed the downstream. Now we're actually sort of looking at unlocking the full value potential, and the value proposition is there. So from our perspective, pushing forward with efficiencies, getting the right governance in place, making sure downstream is in the right place, and then really, you know, we are seeing a very viable story on and around Talnakh and other tier 1 assets that we have in our portfolio to deliver even more value to our shareholders. So it's really, shall we say, value driven rather than anything else.
Okay. Thank you. Well, let's reconvene in 10 minutes. Thank you.
Thank you.
it's my honor to pass the microphone to Anton Berling, the head of strategic marketing. Anton, please.
We start our market section with the outlook. We know you all can't wait, so you want to know how the market section ends, and this is it. We are bullish on the nickel market. We see healthy growth in the industrial demand, and it's mostly underpinned by the Chinese stainless sector. We have the first quarter numbers to confirm this, and the second quarter also looks promising based on what our customers in China tell us. We are even more bullish on the PGMs. We believe that the Russian strategic reserves that belonged to the Ministry of Finance have been depleted. We see growth driven mostly by the environmental legislation for cars and vehicles, and specifically the booming Chinese car industry. We see decay in global mine capacity, so all of this makes the market a deficit one, and this deficit will stay. On the copper side, we are rather neutral. We think that this market is fairly balanced. It's in a marginal statistical surplus. And once again, this is a market which is driven a lot by China. And the stockpiles are moderate, so we don't see any exciting developments on the price side of this market. If you look at the overall basket that we have as a company, we probably have the best selections of metals, both from the consensus price forecast that exists and from the market fundamentals for those metals. The nickel market is very complicated, and some of the numbers you see, they might be a bit misleading. The LME stockpiles have brought attentions of many analysts. If you just look on the surface of it, the LME stock has grown 180,000 tons over the last 2 years. So to many people, this is just a straightforward indication of the surplus. However, over 40% of the stockpile was a technical move of metal from the Chinese bonded warehouses, not transparent, to the LME. So this creates an optical illusion of a huge metal movement, and in reality it's just relocation of storage. The reason for this is that the Chinese banks have changed their policies, and the warehouse receipts from China are not acceptable anymore to them as collateral, so the metal had to be transferred to the LME because those receipts are reputable. And this is a purely technical financial thing, but it does have an impact on the market. If we look at the nickel consumption, it has been growing quite steadily, but again, there's a bit more than meets the eye. The two sectors, stainless and non-stainless, both show growth, and stainless is the biggest growth factor currently, but in the longer run, we see that a lot of growth will be coming from non-stainless sectors. That's a long-term projection, but as a producer of mainly nickel cathode, we think it's particularly exciting for our company. It's a bigger market for the product that we produce, not just generic nickel. If we look into the Chinese sector, obviously it's always about China. If we look at different ways to structure the market and see how demand is developing, you will eventually come out with China, and what's driving demand is always rooted in China. The demand for stainless specifically is based on both domestic consumption in China and their exports to all of the world. When we look at what is the true dynamics, you can get a very different set of numbers. The ones we look at is production of the 300 series stainless steel. That's the high nickel grade of steel. And it has been up 9% in the first quarter of 2015. That's year on year. For the second quarter, we're actually looking at 11%. That's the indication from our consumers. If you take the overall stainless in China, it has shown a modest 2 to 3%, because it includes other grades which have low nickel or zero nickel content. If you look at the overall steel sector, including the carbon steel, it's down 2%. So those numbers can be misleading and can be misinterpreted. You have to get to the very nature of things to see what's really driving demand for nickel. One of the biggest or significant sources of nickel supply in China have been the stockpiles. They have been accumulated before the start of 2014, both in the form of ore that was brought from Indonesia and the nickel pig iron that was produced in China but not sold at that point in time, expecting higher prices. These stockpiles have been helping to compensate the ban in Indonesia. Indonesia was a major supplier to China. The ban has been introduced in January and it has been efficient since. The Chinese have been using the stockpile, so this kind of masked the reduction in supply. And this stockpile is not on the surface. You have to put a lot of effort to try and calculate how much is there. It's not only the tons of ore you're looking at, it's also the grades. So we're trying to assess the nickel units, and we're also trying to assess the cost of it, because there is a huge difference between using high-grade ore and low-grade ore in money value. What does it take you to convert it eventually into stainless steel? Looking at the numbers, we see the stocks in China, the inventories of ore are substantially lower. They probably could last another couple of months, and they have lasted for a year and a half. So they have served their role to the Chinese economy, but now we're moving to a more transparent and balanced market when your consumption is based on either what's mined in China or what's imported into China. So the stockpiles will be out of the equation by the end of this year. The NPI production, which has been the miracle behind the success and growth of stainless steel in China, is reducing. The Chinese, first of all, have less ore availability, and specifically the high-quality ore, which is suitable to produce NPI for the high-nickel steel. Secondly, their NPI plants are being shut down. We get reports about once a week on another plant that has been shut down. The reason for this is not only economical, but also the environmental. The Chinese government, starting this year, is very much focused on the environmental protection, and specifically coal burning, as it creates soot, the biggest pollutant in China. And obviously, the NPI plants are very heavy on coal burning and soot emissions. If we look at what's happening in China just recently, at the bottom left chart, you can see the NPI production and the ferronickel imports into China. So naturally, as the NPI production is going down, the ferronickel imports are going up, because the stainless steel makers still need the nickel units. So if they can't source them locally, they have to bring a product that goes into the steel furnace. So the Chinese dependence on imported refined nickel is set to rise. Ferronickel is just one of the forms. Another would be the nickel cathode. But again, in the end, it's the nickel units that have to go into steel. If you're making steel, you have to have that many units of nickel, chrome, and iron, and your choice of forms is secondary, depends on availability, but eventually you want them at any price. If we look at what's happening in Indonesia now, the Indonesian policy is set to develop processing domestically. It's a very important national project for them. It's not just about the value add. It's about employment. It's about developing adjacent industries like energy, transportation. It's about creating jobs for skilled labor and thus bringing the education in the country up. So it's a lot more than just the taxes for exports of ore. It's a very long-term, a very solid project, and the Indonesian government has no choice but to be consistent. If they soften or back out, this would send a signal not only to the nickel market, but also other commodities available in Indonesia, and probably would ruin their efforts for the next decade at least. The few projects that have been started have not contributed too much to the NPI production in Indonesia. If we look at the resource that is available in the country, by the year 2020 it could be as much as 250,000 tons, which is half of what Indonesia exported as ore in 2013. But in real life, we believe that only 20% of that potential can be realized. We're looking at orders for equipment that are coming. We're looking at the projects that actually do something above the groundbreaking ceremony, like actually starting construction, and there are only a few of them. In the fair is an old government-owned operations. Tsingshan is probably the only example you can see as a private Chinese company is building a project in China, and still they have some challenges because the project was registered as an RCAF, meaning a more modern smelting technology. They're actually building a blast furnace, and now they're trying to negotiate with the government the change in the project. The other 17 projects that we know of, we see their probability as medium-low, just because there's not much happening with those projects really, and the economics of them are not appealing to current prices. So we don't see Indonesia becoming a source of supply that would change the market and bring it back to a surplus, not in the foreseeable future. Another important source for Chinese market is the Philippine supply. Again, there's a bit more than meets the eye. Sometimes the analysts would just look at the import statistics, build the line expansion, and assume how much will be coming from the Philippines. In real life, their exports have been above their money because there was a stockpile built before during the low prices, and the Filipinos withheld it to wait for a better price, which is normal business behavior. The problem is that this stockpile mostly has been delivered to China already, so you can't expect more supply than there has been mined in the ground. Another challenge is that their current reserves would last under 5 years, so they would need new mines to be built. However, the current Filipino legislation prohibits this. They still have not decided on the natural resources taxing policy, and until this decision is made, there are no licenses that are being issued. So, in a nutshell, what we see is the nickel market entering deficit as we speak. There is a stockpile that is being used up, and we see the first indications like the LME has passed its peak. It's starting to outflow metal in small quantities, not very significant, but it's a signal and it's a start. If we look broadly at the last few years of the nickel market, using 2013 as the benchmark, the production of nickel has not really changed. It's the bottom right chart. We had the new projects that are being commissioned, we had depletion at the existing projects, but on average, after 3 years, we come out at a flattish production output. At the same time, consumption was growing at a very steady number all those years. So this puts a market into deficit. Once the ore stocks are depleted fully, and once we see a slighter increase in outflows from the LME, I think it will be a very strong signal for the overall market that the fundamentals have truly changed. Moving to palladium, we are even more bullish palladium than we are nickel. Obviously, palladium demand outstrips supply. The market is growing very healthy. Industrial consumption is very stable. It's driven both by environmental legislation, which becomes more stringent, and by the number of cars being produced. There's also a new important source of demand, well, relatively new, the investment community in form of exchange-traded funds or ETFs. They have been very supportive of the market. They continue to invest into palladium, and typically the overall inventory with ETFs increases over time. We had a bit of an outflows earlier this year, but it's very likely that as we move further in the year, there will be net inflows into the same ETFs. At the same time, if we look at the new projects and future supply of this metal from the mines, actually we are very palladium hungry as a global economy. On your left bottom chart, you can see that if we put all the existing projects into the chart, it's still not enough to feed the world. In real life, we know that some of the projects have to be delayed or have to fail. It's just a fact of life. You can never get it right 100%. So what we see is a gap that will stay for a few years. And this deficit that has existed for a few years now, has been covered by the stockpiles. But one of the challenges is that the stockpiles are not transparent, so we don't really know the day they will end. If we move to platinum, it's a slightly similar picture. Again, automotive is the biggest driver. The investment demand is very strong and supportive. If we compare platinum and palladium ETFs to gold, the money is much more stickier. Gold is a bit more volatile, and for many companies, the gold ETF is really a proxy for the gold shares. In the PGM space, investors are typically more educated and stronger believers into the future of these metals. If we look at the platinum supply, it has been declining. Historically, the biggest growth, or most of the growth in the PGM space, has been coming from South Africa. In the Northern Hemisphere, most of us would mine PGMs alongside with the base metal, so the production has been rather flattish. It is really South Africa that has been growing this production for years and years, until 2007, which was their peak year. And since then, there's a whole array of challenges and issues that really prevent the companies there from increasing their production. Last year we had a major strike lasting over 5 months that certainly impacted the 2014 numbers. So this year, statistically, we have an increase, but at best we're getting back to 2013 level of production in South Africa. Looking forward and looking at what's happening to the mines, we believe that at best the companies there can keep their production. Most likely it will continue to decrease. So this puts the global market, platinum market, in the deficit. It's a bit less than it is for palladium, but still it's a deficit. Another important source is recycling, and again, quite often you have a misinterpretation of what recycling can bring us in the future. People would build linear equations and try to draw the supply as a straight line. The nature of recycling is that you have to consume the metal before you can recycle. If it didn't go into the car, you can't recover it ever. The car catalysts have evolved over time. They were different in the late 90s when we had the peak loadings for palladium. Those catalysts, by and large, have been processed already, because your average recycling gap is 10 to 12 years from the time the car is sold to the time it's recycled. So we've passed the peaks in palladium, and looking forward, we see a much more modest rate of growth in palladium recycling than we had in the last 5 years. If we look in the platinum market, the pattern is a bit different, because platinum in the early 90s was taking the market share away from palladium, so we had heavy platinum loadings in the car companies. Again, this has evolved, and we are expecting a slight increase in recycling in the next few years, but after that it's a very flattish profile, meaning no growth. So recycling will stay flat and demand will continue to grow. So recycling is important, but it cannot compensate for lack of mining capacity on the supply side. If we look at how the car industry changes the world in the PGM space, it's not only the units, the number of cars that is being produced, it's also the engine type and the engine size. We had a time when Europe was very fond of diesel engines, and this has changed the landscape, demanded more platinum, and making the space smaller for palladium in the AutoCAD space. Then there was a new technology when palladium was introduced into the diesels. Now we have a different set of technology when platinum and palladium have the same value in the catalyst technology for the car makers. And at the same time, you have most of the growth concentrated in countries like China, where the engine would be small, and thus it has to be gasoline, because diesel is efficient only if the engine is more than 2 liters. And if it's gasoline, palladium would be the metal of choice. So most of the growth is moving to countries that would produce a palladium-only catalyst, or mostly palladium catalyst. At the same time, you have some of the warning signals coming from European capitals that are starting a bit of a repression on the diesel vehicles. Some people in Europe believe that those vehicles are too hazardous for the big cities, so they should be prohibited. We don't know how this develops, but certainly it's not a very exciting piece of news for the platinum market. So looking forward, most of the growth from the automotive sector would be aligned with palladium more than this with platinum. If we look at the above ground PGM stocks, this is probably one of the key factors in this market and the least discovered one, because it's not just opaque, it's secretive. If you talk about the Russian government stockpiles, they're protected by government secrets. If you look into the Western stocks, the banks are always reluctant to say how much is in the vault and who's the beneficiary behind the stockpile. So it takes an incredible effort to investigate this. We undertook this effort, and we've discovered that the stocks that exist are not very uniform. If we speak about palladium, roughly half of the stockpile on the ground that we were able to identify is not immediately available to consumers. It's ETF holdings which have many beneficiaries behind them with very different investment strategies and very different target prices, if they have a target price. So you can't just pick a price and say, well, this is when it becomes supply. In real life, if the palladium price would start to increase, you actually would see some of the investors increase their positions rather than unloading them. If you look at the exchanges like Tocom and NYMEX, there's a physical stock that is with the exchanges. But for example, NYMEX has a limit of 50,000 ounces a month that can be delivered from the exchange. So technically, yes, you have a stockpile, but from the commercial point of view, it cannot be made available immediately. Some of the holders, like hedge funds, you can't really say when and if they're going to sell. They might unload for a very different reason, despite the palladium price, and we've seen examples of this. Or they might have a very different target price and hold it. Or they might choose not to sell, but rather lease it to the companies. And again, we've seen this in the late 90s and the year 2000. When the palladium metal became virtually unavailable, you couldn't really buy it, but you could borrow it, but you couldn't repay it. So you ended up paying ridiculous interest rates on palladium. If we look at the platinum, we believe that the stockpiles that are commercially available and immediately available are even less. They're about a third of the stockpile that we were able to uncover. If you look at the different views on the stockpiles, one of them we've chosen the Standard Bank. It's one of the contrasts to our own assessments. It's a few times greater, but we can't really uncover the methodology they use. What we've chosen not to include as stockpiles were different coins and jewelry and the catalysts that do exist within the chemical and petrochemical industry, because we don't really see it commercially as a stockpile, something you can actually buy and use. The same would apply to the pipeline of metal that exists with the fabricated companies, because again, even if someone goes out of business, you can't take the metal out of the pipeline and sell it to the market. Someone will take their market space and build up the same pipeline. So from the commercial point of view, we don't see this as a source of supply. So this brings us to an assumption on the commercial stockpiles that are only a few months of global consumption. That's a very different picture. This is actually a very normal stockpile that you would like to have in any other metal. If your global stockpile is less than a month, you become nervous. Because any interruption, any strike or accident might turn this market into a physical shortage of the metal. If we look at the stockpiles that were accumulated in Switzerland, and we're based on the custom statistics of this country, it actually shows you that the Swiss stockpile is down to whatever it was before 1988. We don't know what the number was, but just common sense tells you it could not be a lot at that point in time. So once again, we believe that the stockpiles, when they deplete, the commercial part of it, will show us a revolutionary different market. If we look at the relative prices of platinum to palladium, the gap between two metals has been narrowing. At peak, it was over 4 times the price of platinum to palladium. Now it's down to 1.3. We believe that this trend will continue and the gap will become even less. Because again, fundamentally, the value in use for the automotive companies is roughly the same. Outside the automotive, the use of these metals is unique. It doesn't really have a substitute. So it doesn't really have any relative pricing between the two metals. And we think that the overall price levels for this metal should be increased because based on the fundamentals, the price is unfairly low. Moving to the copper market, I'm afraid it's not as exciting as nickel or PGMs. We don't see major changes in this market. It's fairly balanced. We do have a statistical deficit, but basically production is growing almost the same rate as consumption of this metal. The only thing that could change is disruptions. Last year we had a very low level of disruptions. Typically we're looking 3 to 5%. So if we have more disruptions this year, we might see the deficit of the same size. But again, it's not material to this market, so our outlook is very neutral and flattish. And we see a lot of support for the nickel price coming from the Chinese government. They do intervene in this market. If they believe the price is too low, they start accumulating metal in the Reserve Bureau. And we don't know the size of it. Again, it's guarded by the government secrets of China, but we can assume it's millions of tons. If they believe the prices are too high, they start releasing the metal to the domestic consumers, thus lessening dependence on imports of copper and affecting the global price. So, in effect, they keep the copper price in a certain range, which makes copper less volatile than most of the metals. And moving from the markets to our sales and marketing strategy, we have just done an update this month. We believe that monetizing the incredible ore body that we have is not good enough for our efficiency. We also want to be able to convert the products that we have into cash as efficiently as we can. We operate our own sales network that covers more than 40 countries, so we include all the major markets. The strategy has been really developed in 2003 and is focusing on industrial consumers and direct relationships with them and long-term contracts. We believe it's a viable strategy. It has proved its efficiency through the cycle, including the crisis years like 2008 and 2009, where we're still able to convert all of the metal we had for sale into cash without giving discounts to the LME price. But the sales marketing strategy had to be fine-tuned and improved. It was efficient, but was lacking a bit of effectiveness. One of the obvious decisions lying on the surface was introduction of economic value add as the benchmark and as the KPI for the sales and marketing. We've done a great effort on reducing working capital, and a big portion of the overall contribution you see is a result of the sales and marketing group activities. We are focusing on even further increasing and strengthening our bonds with industrial consumers. But instead of doing this on a very broad scope of hundreds of clients that we have, we'll actually focus on the anchor clients to develop the most synergies and the most outcome for our shareholders. We believe that we have created substantial value to the shareholders, and we believe this serves as proof that we are able to continue with this. We will strengthen our marketing team by hiring people and expanding our technical advice group that talks to consumers, that has a lot of knowledge and expertise on how you actually use nickel efficiently in this specific manufacturing process. So it will be providing both value to the customer and to the company, securing a stronger bond and securing clients that are aligned on this advice. We're also looking to diversify our nickel product range. We expect to do this together with anchor clients, and we'll be looking for different opportunities and how we do this with the minimum risk for our companies and the highest returns we can get. There's also an improvement coming from the production side. In a couple of years, we expect to have better products that are more tailored for specific usages of nickel. So this will add a bit of marketing power to our sales team to try and move this metal to new niches or to expand our sales to existing customers. So we believe that all of this illustrates our ability to do a very good job in converting the metal to cash. And we think that we can cope with this, especially with the new upgraded upstream and downstream strategies. This ends the market section. Thank you, and may I pass the microphone to our Chief Financial Officer, Mr. Sergey Malyshev.
Thank you very much, Anton. Dear ladies and gentlemen, let me start with key highlights of 2014 financial results. As you see, our margin and ROIC have significantly improved from 2013 thanks to favorable macro environment as well as management efforts. Our revenue increased 3% year-on-year to $11.9 billion on the back of stronger nickel and palladium prices and growth in precious metals production volumes. EBITDA grew 35% year-on-year to $5.7 billion, driven by a substantial reduction of cash operation costs on the back of cost optimization, higher metals prices, and ruble devaluation. EBITDA margin expanded to 48%, which is the highest level among metals and mining majors. Net profit almost tripled to $2 billion, while net profit adjusted for non-recurring items reached $4 billion. CapEx decreased by 35% year-on-year to $1.3 billion, resulting from ruble depreciation, improved payment terms with contractors, and optimization of infrastructure investments. Free cash flow increased 81% year-on-year to $4.7 billion, driven by the expansion in EBITDA, lower CapEx, and sharp reduction of the working capital. Leverage remained conservative, with net debt EBITDA ratio standing at 0.6 times. Although macroeconomic environment in 2014 was somewhat challenging with highly volatile commodity markets and the slowdown in Russian economy, Norilsk Nickel managed to achieve high financial results thanks to a resilient business model. Notably, we have managed to contain our cost even in the face of relatively high inflation in Russia. How Mr. Fedorov noted, when evaluating our business, we compare ourselves not to Russian peers, but to globally diversified managers. In 2014, our EBITDA margin increased to 48%, which brought us to a top of the global metals and mining industry. And the second half EBITDA margin was even higher at 32%. At the same time, our leverage is at a very comfortable level. The ratio of net debt to EBITDA is significantly lower than most of other global metals and mining majors. Our financial results have significantly beaten analysis expectation dating back to 2013. This is primarily a result of a change in metal prices and exchange rates, but good performance on working capital and free cash flow was driven mostly by management efforts. Let's go through a quick overview of revenue structure. Metal sales for the 2014 year increased by 5% and amounted to $10.9 billion. This is driven by palladium and nickel prices coupled with stable volumes. We have increased our sales to the promising Asian market to $3.5 billion, almost one-third of our total metal sales. At the same time, Europe remains to be the most important market for us. In 2014, we increased sales of platinum group metals as well as higher margin nickel and copper produced in Russia from our feedstock. This allowed us to partly offset the effect of low volumes of third-party nickel refund. Our major metals prices fluctuated in different directions, but the net impact on us was positive as nickel and palladium prices increase outweighed low copper and platinum prices. As a result, the share of copper in our revenue declined by 3% in favor of nickel and PGM. As you can see, our cash cost in ruble terms remained largely flat in 2014. Notably, this also happened in 2013, so we can say that the management actions fully compensated for inflationary pressure. Our efforts were focused on improving procurement, raising labor productivity, as well as achieving low-cost additional production by utilizing secondary feedstock and reducing work-in-progress inventory. Almost every major cost line, with the exception of labor and acquisition of third-party feedstock, saw reductions last year. The largest part of our cost base base 39% is labor. In 2014, growth in this line in ruble terms was 3%, while the wages were increased by 5%. So by increased labor productivity, we were able to save 2% of our labor expenses. Mr. Dichenko mentioned long-term targets of this initiative, 10% till 2018. The increase in cost of purchased metals and semi-products does not have a negative impact on EBITDA because it is fully offset by the corresponding revenue from resale of metals and refining of semi-products. In dollar terms, our cash cost fell by 14% year-on-year, or almost $700 million, primarily due to the ruble devaluation. We regularly assess our sensitivity to change in Russian ruble exchange rate. As you can see, 1% change to exchange rate translates into about $26 million of EBITDA and $34 million of cash flow. This estimate is based on 2014 shares of foreign currency in our OPEX and CAPEX. Let me now go through to the major drivers behind EBITDA growth and cover SG&A expenses. Strong environment contributed more than $1.1 billion of additional EBITDA, with positive influence of high prices and weaker ruble. Efficiency improvement measures contributed $256 million through cost control initiatives, productivity increases, as well as procurement savings. As a result, we managed to offset the inflationary cost pressure of about $220 million. SG&A expenses decreased by 29% over the last 2 years on the back of ruble depreciation as well as export duties cancellation. In 2014 year, we have launched one of the key optimization initiatives, which is creation of shared service center. We expect to gradually relocate administrative personnel from Norilsk and Kola regions to low-cost location in Russia, thus reduction our SG&A expenses. Mr. Potanin mentioned that working capital management was another success during the past year. Overall, from year-end 2012 to year-end 2014, we improved our net working capital position by almost $3 billion, of which $2 billion were achieved in 2014. Of course, a significant part of this impact was coming from ruble devaluation and other environment factors. However, management-driven improvement brought $1 billion improvement 2014 alone. The major drivers were increased level of prepayment received from customers, extended use of receivables factoring, and longer payable settlement terms in line with 45 days benchmark we have put in place for our suppliers. As a result, we released operation cost flow improvement of $1 billion to 2014 and $500 million in 2013 and reached a comfortable working capital to revenue ratio of 9% in line with global measures. Our net debt fell by 23% to $3.5 billion, while net debt EBITDA ratio reduced to 0.6 times from 1.1 times. But comfortable for the management level of leverage is 2.5 times higher, so we plan to improve the efficiency of capital management. In spite of challenging credit market conditions, we have made a number of new loan deals, financing approximately a third of our debt portfolio. Importantly, our debt has remained fully unsecured, and the average cost of debt remained unchanged, while the average debt maturity was extended to 40 months. Thank you for your attention. Now I have the honor to pass the floor to my colleague Andrei Bugrov with corporate governance update.
A very warm welcome to everyone. Now, I need to change it, I guess, right? Here on the screen, we have some data on corporate governance review and initiatives. Both the management board and the board of directors are focused on specific deliverables in the governance area. And we're pleased to report the enhanced role of the board committees. I would show that on the next slide more explicitly. But here you can see clearly from the list of many main issues that have been considered that this role is indeed totally new one. Now, what we also find important in this regard, let me just move to the next slide. Some of the new issues that have been considered, and in fact, this issue of corporate change and more transparency and accountability, it is indeed a culture change in the Russian corporate climate, and many big corporates are working on that quite extensively. I have to say that Norilsk Nickel, in my view, is probably leading the way in this change. So amongst the issues that have been considered by board committees, let me highlight the issue of anti-corruption policy, which we find to be extremely important. And it's not just a declaration of intent or anything else. It's a fully fledged action plan involving regular training for the employees, collective action with other big companies, and specific requirements that we have for commercial partners in the supply chain and amongst the contractors. The main message of this slide is pretty straightforward. Strong board led by independent chairman. And I have to say that at the recent shareholder meeting, which took place in Moscow on the 13th of May, the board of directors re-elected unanimously Mr. Gareth Penny as the chairman of the board, and that was done for the third time. So that's actually, it is my pleasure to invite Gareth to the podium and to share with you his impressions of 2014 and expectations going forward. Mr. Penny, you have the floor, please.
Thank you, Andrei, and ladies and gentlemen. I won't speak for long because really this is management's day to talk to the investing community here in the city. But what I would share with you is the following. I mean, as Andrei has said, I began my third year as chairman just recently of this great company. And I think what is clear, and many of you said this when we were having a cup of coffee just a short while ago, is the transformation of this company is truly extraordinary. The first time we had this presentation in 2013, there were many comments about the level of information and data and so on and so forth. And just looking at what we're seeing today and the depth of and the underpinning of the systems and the processes in the company and the performance, I think, is truly extraordinary. It is the job of any board to do two things. One is to monitor performance clearly, and the other is to monitor governance. And I think what you're seeing from Vladimir and the team today is truly outstanding performance. You only have to look at the comparables in TSR or pretty well any of the other metrics that have been shared today to see how Norilsk Nickel is performing against the other majors out there. And I think you would all agree that the level of, firstly, delivery against undertaking, and secondly, the delivery against targets and actual that we see on these slides is extraordinary. The second thing that Andrei Bugorov touches on is governance, which clearly as a board, and indeed you as the investing community need assurance on, is that the level of corporate governance in Norilsk year on year improves dramatically. And so if I look at where we were a year ago compared to where we are now, in the underlying board committees, in all the checks and balances that are being put in place and still need to be put in place, I'm very proud of that record. And if I bring performance and governance together, I just want to highlight two aspects. Again, it's an observation from the floor today, but if we look at performance, it's the extent to which this presentation is now saying we're starting to get to a situation where we've got a high-performing set of assets, so let's think about growth. And so there's a marked change in the presentations today, looking beyond the immediate into the future and saying, why is this going to be a company that you want to put money into and invest in for the longer term? And then the second thing that I think has come out of today's presentation very strongly, and again, I've heard that from a number of you in the room, under governance is sustainability and particularly addressing the environment. And you heard a lot from Sergey about that. And to us as a board, that's tremendously important. And to see projected levels of sulfur emissions coming down from around the 2 million mark to about 1.5 over the next few years and then down to 500,000 in the years ahead is for us tremendously important. So really that's what I want to share, colleagues. I think a track record over the last year that we're proud of. I think tremendous improvements both across governance and across performance. And I think we're excited and looking forward to the years ahead. Rob Edwards, another non-executive director who's been here most of the morning, and myself and the rest of the board, we have 5 non-executive directors on the board. We continue to work hard, I think, in the interest of all shareholders. And I think we're very pleased, Vladimir, with the progress that you're all making as a team. So thank you very much.
Ladies and gentlemen, I think that the main task for the man who is making final remarks is not to spoil the whole things which happened before. That's why maybe I just thank you for your attention. Thank you, Gareth, for what you have said about board appreciation of our activities. And I hope that we'll keep this, let's say, pace of changes in a positive direction in Norilsk. Despite our disappointment on last night result of our hockey team, it will not break us, and we'll continue to work. Thank you very much.
Now we're ready to proceed with our second Q&A session. Questions, please, and please introduce yourself before asking questions.
Viktor Nikisin, BASF Metals. Question to Mr. Bugrov. Is there any negative influence of a current anti-Russian sanctions on a Norilsk nickel business these days, and how can you prevent it going forward?
Thank you very much. I've been waiting for that question. And indeed, if I would say that the company is immune, you wouldn't believe me. We do not exist in a vacuum, frankly speaking, and if there are sanctions that have been introduced, they indeed impact the business climate, investor confidence, access to financial resources, the price of that access, and all of these factors would have to be taken into account. You have to work on your efficiency gains in order to be able to withstand various external shocks. We are a 100% private company with a lot of important operations in the world market. So as far as specific sanctions are concerned, I would not be able to pinpoint any specific expectations that I may have. But in terms of efficiency gains that we've been able to achieve and would be able to continue going forward, I think we are in a fairly strong position to withstand external shocks. Thank you.
Thank you. Next question, please.
Thank you, Sergey Donskoy, SocGen. I have two small questions. One on EBITDA uplift from the Polar division reconfiguring. Is this uplift of $350 to $400 million going to be realized in a big bang fashion at the end of 2017, or is it something that we are going to see realized as we go, piece by piece every year? And if it's not the case, what year do you think will be the most fruitful? This is a question of number one. And my second question is to Anton, I think. Do you have some estimates? What is the current level of stainless scrap remelt in China in terms of how much of stainless scrap is being remelt in proportion to the total stainless steel production, and how this level may change going forward and affect the market balance? Thank you.
Well, I'll answer the first question. This $350 to $400 million of extra EBITDA is something that we plan to generate once the downstream configuration is complete, which is, according to our plan, is from 2018 onwards. So that's annual incremental EBITDA starting from 2018 onwards. However, as you know, we are progressing well ahead with the upgrade and the expansion of capacity of Talnakh concentrator, so therefore some of that effect could be felt as early as 2017.
As to Chinese stainless steel scrap, as a country, they do not generate much of the scrap yet. It will take years before they build up the consumption. Previously, they were bringing a lot of scrap from other countries, specifically Europe, but with the development of NPI technologies, they've canceled scrap deliveries. They found NPI more attractive. So, yes, they might revert to taking more scrap in, but this means they're taking it from the Europeans. It doesn't change the overall nickel units that are available to the market. Their current recycling domestically is probably worth 10,000 tons of nickel.
Thank you. Next question, please.
Thank you, Nikolai Sosnovsky from UBS. In this presentation, you've mentioned lots of legacy assets. Can you please quantify any potential impact on your free cash flow, just like you did on this slide we discussed before? Do you have any specific targets for the next several years in terms of potential sale or partnership or maintenance capex savings? Any quantitative number would be great help. Thank you.
Well, the whole idea is that we're launching this phase 2 strategic review, which with the whole purpose of it is actually figuring out what we're planning to do with those assets. So therefore, with gas assets and with certain logistical assets, the idea is pretty straightforward. Whereas with regards to the southern cluster, the options are still out there, and we still haven't figured out which option to pursue. So therefore, until we have figured out exactly which option to pursue, because sale of those assets is one of the many options, but there are a number of others, and only once we figure out the exact option, the exact way to pursue those assets, we'll be able to give you more sort of concrete guidance in terms of potential extra sort of value generation for the company. Thank you. Next question, please. You have a question?
Thank you, Gary Greenberg from Hermes. Just we follow the Chinese auto market fairly carefully, and it seems like it's slowing down quite a bit. Does that have any effect on your estimations for Chinese demand?
This is one of the points I was making in my part of the presentation. If we speak about the Chinese number, their GDP is expected to be 7%, down from 7.1%. Which to me doesn't make a difference at all. Their stainless steel production is up only 2%. Their high nickel bearing stainless steel production is 9%. So when we speak about China, we're not just looking at the generic macrostatic data, we're looking at the customers, and we're very confident on this. On the automotive side and the PGM side, they have become the biggest producer of cars. They have a huge aspiration in the country. It's a question of affordability. and they're buying cars at an incredible rate. In some of the big cities like Shanghai and Beijing, they have to limit your ability to buy cars. You have to have a parking space that you rent or own in order to be entitled to buy a car. So it also shows a very huge potential, and in the longer run, it's obviously a very strong growth.
Thank you. Next question, please.
Hi, this is Hannah Gray from BlackRock. I just wondered if you could comment maybe on the rise of protectionism in the stainless steel industry in Europe, and whether or not that has the potential to change the structure of the industry or has any opportunities for you.
Changing will be difficult because a substantial part of the market in Europe has been lost already by the European producers to the Chinese producers. Protectionism could have an effect, obviously, but for us as a nickel supplier, this is secondary. As long as the world consumes nickel, we're neutral whether it's Europe or China or the US, we can deliver. As long as there's a need for nickel, we're happy.
Thank you. Another question?
Thank you. Alexander Rozhatskin of UniCredit. Just a few questions on the debt, if I may. Firstly, if you could discuss maybe your plans for the short-term debt, whether you're planning to refinance or repay it, given rather substantial cash cushion. And do you have any borrowing plans going forward on top of the 1 billion from the VTB?
Regarding our debt, current structure convenient for us, and we are not in a hurry to make new deals, and we are going to estimate market prices regarding fixed income facilities, and today we will start non-deal roadshow for this purpose.
Well, perhaps one last question. Well, since you don't have any further questions, thank you, everybody. And may actually join us in buffet lunch just outside. Thank you.